Hey everyone, wanted to share some great long-awaited news regarding mortgage rates that finally started coming down, and I also wanted to shed some light on why they're coming down. So some quick background, mortgage rates move with certain mortgage-backed securities in the bond market. So the more investors that are buying these mortgage-backed securities, the lower the interest rates will go to the customer. A very accessible benchmark to keep an eye on is the 10-year US Treasury. You can look it up on CNBC or any website. And basically what you'll do is you'll just add 2.5% to wherever the 10-year US Treasury is on that day. And that's about what the average 30-year fixed is. So as recently as mid-February, the 10-year US Treasury was at around 4.6%, making the average 30-year fixed at around 7.1%. As recently as a week ago, the 10-year US Treasury drifted down to about 4.3%, making the average 30-year fixed at around 6.8%. In the last 48 hours, the 10-year US Treasury dropped to 4%, making the average 30-year fixed at around 6.5%. That's a pretty big move in a pretty short period of time. The reason for the move is the implementation of the tariffs. So the tariffs are providing a potential squeeze on publicly traded companies' profits. So you probably noticed that the stock market is selling off. Side note, don't look at your 401ks for a while. And ultimately, when the stock market sells off, there's typically a rally in the bond market because investors are essentially pulling their money out of stocks, parking it into the bond market, and waiting for the storm to pass, so to speak. But there's more good news with regards to potential further dropping of mortgage rates. So a minute ago, I mentioned that the spread between the 10-year US Treasury and the average 30-year fixed rate mortgage is at around 2.5%. Well, historically, that spread is 1.5% to 2%. And forecasters are predicting that that spread is going to start to come back in line to historical averages. So if the 10-year US Treasury drifts to around 3.5% and the spread between the 10-year US Treasury and the average 30-year fixed narrows from 2.5% to 2%, we could see mortgage rates in the mid-5s in relatively short order. So if you've been waiting for mortgage rates to drop to buy a home, now could be a pretty opportunistic time to either dust off your pre-approval letter or get pre-approved because you've got inventory, the highest level it's been in years, and you got mortgage rates potentially the lowest it's been in years, and could potentially be a very opportunistic time to buy real estate.